What's good, everybody? Spektrades back here. In this video, we're going over this simple reversal trading strategy that pays me every week. And foremost, my name is Wendell, but I go by the alias Spektrades. I am a full-time day trader and have been in the financial markets for half a decade. I specialize in ICT smart money concepts. My goal is to simplify smart money concepts and help you shorten your path to success. If you want to stay up to date with me, make sure to check out my Instagram at Spektrades. I have been a mentor to over 1,000+ students, and if you want to join me for daily trading plus private lessons, you can just click the link in my bio, find all the links. If you are interested in more in-depth and personal help, make sure you check out the first link in the description for the Patreon, where we have our Spektrades Mastery Hub, where you can access private mentorship lessons from beginner to advanced mastery, and also live trading with me every single morning, and also daily pre and post market analysis and exclusive community access. So if you are interested, make sure you check out the first link in the description for the Spektrades Mastery Hub. We have our higher time frame point of view, and then we have our lower time point of view, and then right here we have our step-by-step format on how we will trade this reversal trading strategy. We have to zoom out, right? That's the first step. When in doubt, we zoom out, right? The thing that I've noticed about a lot of traders, right, is that they scale down to the lower time frame, right, trying to get a entry without even understanding bias, right? Without understanding the higher time frame bias, right? The higher time frame narrative. Why would the higher time frames is in a bearish format? A lot of people, they scale down to the lower time frames and see lower time frame setups and start buying, right? And they get crushed, right? They get crushed by it. So when in doubt, we have to zoom out. The higher time frames is the bigger brother to the lower time frame. If you don't have a solid bias, a solid higher time frame bias, you will get crushed on the lower time frames, right? Because the higher time frames is way stronger, way powerful than the lower time frames. But it is the lower time frames that sets it up perfectly for us to reach higher time frame zones. Higher time frame, the 4-hour time frame, the 1-hour time frame, and the 30-minute time frame is for us to understand our higher time frame bias. Is price bearish or bullish, right? Is price showing us bullish sentiment or bearish sentiment? That's the first step. You have to understand your range. Once you figure out your higher time frame bias, find your higher time frame range. Observe recent liquidity sweep of old highs / lows, and was there a internal range high / low broken? So as you guys can see here, right, in this higher time frame schematic, so price was once in a bullish format, and then price started selling heavy, right? Just started selling. So now price had went from being bullish clean to now being bearish perfectly. And then on the higher time frames, what we notice, we see that we had this old low right here, right? This old low that was acting as inducement, and price came in clear that old low on the higher time frames. Price cleared that old low, and then price came in purge through the high that did the liquidity sweep. So now we have a internal range high, right? An internal range high broken. So price took liquidity and broke a internal range high. Boom. So now we have found our higher time frame range. So now it's from this low to now this high right here. This is our higher time frame range, from the low to the high. Step is to have patience and discipline. Once you have found your higher time frame range, you have to remain patient and disciplined. Do not be in a rush. Wait for proper price and observe momentum closely as price coming to your point of interest. So once you found out your higher time frame point of interest on the daily, the 4-hour, the 1-hour, or the 30 minutes, right, you have to remain patient, right? Don't be in a rush. Don't be in a rush. Wants to pull back up here, and you see that price down, right? It's crawling back down, but price haven't even tapped into your point of interest, and you're already buying. Do not be in a rush. Just relax, right? Relax, because there's more that goes into it, right? There's more that goes into it. We have to just wait for price to not come inside of our point of interest, and we have to wait for momentum, right? So make sure you guys watch my top-down analysis video, also the best top-down, the final top-down analysis, right, where I speak about how price is coming to your point of interest, right? Price should be crawling back down to your point of interest, right? Crawling back down like this, or crawling up to your point of interest. That is like the best momentum to see when price is approaching your point of interest. You never want to see price drop like a hot knife to your point of interest, right? You never want to see that. That's just signs that price want to purge through it clean. And you never want to see price punch through your point of interest, like punch through it, right? That's like clean momentum that price is just gonna come and clear that point of interest. So you always want to see price crawl, right? Crawl back and forth, crawl clean. And then once price reached that zone, we see price push down, right? That's how we see it. So for number 3, we have to have patience and discipline, right? Once we find our range from this side of this low, and we know this is our point of interest, right? From the daily, the 4 hour, the 1 hour, or the 30-minute, right? It can be either one, right? Depends which it is. We're just waiting for price to pull inside of our zone cleanly and with correct momentum. Next step is execute. Once price has now tapped into our higher time frame point of interest, the 5 minutes, the 3 minutes, and the 1 minute time frames to see if a lower time frame entry model has been shown, just like we see in this schematic, right? So once price taps inside of our higher time frame zone, we'll scale down now to the lower time frames. So if your higher time frame zone was the 4 hour, we'll scale down to the 15 minutes now and look for this lower time frame entry. If your higher time frame zone was on the 1 hour or the 30 minutes, we'll scale down to the 5/3 minutes and 1 minute, right, to execute this strategy right here. So now on the lower time frames, as you guys can see, all we're looking for is the same type of reversal type of pattern, right? We're looking for price to now give us a liquidity sweep inside of our higher time frame zone. So we're looking for the liquidity sweep of structure, our first confirmation entry right here. These are our first entry right here. Or if you weren't on price, right, you weren't on market, right, you were just busy, right, and you missed this. Further give you reaccumulation, right? Before price push up all the way higher, price will come back and reaccumulate after every break of structure, right, and show you more reaccumulation for you to re-enter, find you another position to re-enter and scale in. So if you miss this entry right here, this lower time frame entry, there's always other lower time frame entries. So there's never a fear of missing out. You are always in line with price action. Once you have scaled down to the lower time frames and see this, be more patient. I would say if you miss this entry, right, you are just waiting for more confirmation. You can wait for this super confirmation entry right here, boom, and then you scale in. So this is the last step right here, right? Once price has tapped inside of our higher time frame zone, we scale down to the 15 minutes, the 5 minutes, the 3 minutes, and the 1 minute, right, to show us our lower time frame entry model, right, just like we see in this schematic right here. So we have to wait for price to tap inside of the zone, and then we scale down to the lower time frame and see if this right here shows us, and then we'll execute and take it with proper risk management. But this is the simple reversal trading strategy that pays me every week. It's simple, but it works. Now let's hop on the charts and see exactly how we can execute this. Now on the charts, as you guys can see, we're on GBUSD on the 4 hour time frames, right? The first thing we have to do is develop a higher time frame bias. So as you guys can see on the 4 hour time frames, price was playing inside of this range right here, right, building up liquidity, and then price came in, purged through that range, purged through all these old lows, and refound this old order block right here. This is a order block on the 1 hour time frames that I'm going to show you guys. But price purged through all this consolidation, right, accumulation, right? This is just the power of 3. So make sure you guys watch my power of 3 video. Also, it's a updated power of 3 video on the Patreon. Also, if you guys want a more in-depth video on the power of 3. Price is just building up liquidity, boom, accumulation, manipulation of the lows, right? And what can we anticipate next for prices to distribute? A, M, D, the power of 3, clean, right? And once we know this on the higher time frames, right, this is what the higher time frame is showing us. We can now even better position ourselves on the lower time frames, right, when we see our confirmation entries align properly for us to attack old highs clean. And now let's get down to the 1 hour to see more price action. 1 hour, as you guys can see, this is the old order block right here that price reclaimed right here. Boom, price purged through this old high right here. This was supposed to be resistance. Price was supposed to come into it and push lower, right? But we see that price purged through it clean and build liquidity all above it. So we see that price give us a liquidity sweep right inside of it, right? Price build this old low, give us a liquidity sweep clean inside of our range, and then give us a break of structure right here. Perfect. So now this is our higher time frame range, from this old low to now this old high right here. Clean, clean. From this old low to now this old high right here. Perfect. Now let's scale down even more to the 15-minute time frames. As you guys can see, we're now observing to see our higher time frame zones, as you guys can see here. So for me, since I'm like a lower time frame scalper, I scale down to the 1 minute and sometimes the seconds. The 15 minutes is usually the last time frames that I kind of look for a zone at, right? I kind of want to see reactions inside of my 15-minute zones, right? It might be the 1 hour for you or the 4 hour, right? Depends on what type of trader you are. If you're a day trader, I recommend on the 4 hour, the daily, and sometimes the 1 hour, right? The higher time frames. But if you were a scalper, I recommend the 15, the 30 minutes, and the 1 hour, right? Because those plays will happen during the session, right? As we're gonna see here. So as you guys can see, right, price to give us a liquidity sweep and a break of structure, right? A market structure shift, right? We can also name it right here. We can put it right here. This is our swing high right here, clean. This is a market structure shift. I'm just gonna put break of structure right here. So price give us a liquidity sweep of the old low and a break of the internal range high. Exactly what we're looking for, right? Liquidity sweep inside of higher time frame zone, right? This was our 1 hour order block. Perfect. And then we have our break of structure. And then what are we looking for? We're just looking for price to pull back inside of one of these zones here. Out this trade earlier during the pre-market outlook. I'm just gonna put out the screenshot right here. Boom. Showing you guys these two zones right here that I was observing. This is the before, and right here I'm just showing you guys the after, right? So perfectly that this truly works. So I sent this during the pre-market outlook, advising the students in the Patreon about this, and this is the after of it happening. So I had used two zones, right? And you might be like, why do I have two zones? I had this zone right here because we had inducement and we had this old low right here, right? This old demand, right? When price opened, price was only here. The range was from this low to now this high, right? Price could always come back down here to clear this inducement, right? So I always give myself two zones, right? Two zones for price to play inside, right? That's something that first clean with the inducement, and then I had this zone right here, a higher, right? Why would price want to come all the way back down here if price is already so close to this old high, right? This high right here is premium pullback inside zone, right? With liquidity near it. This is our inducement. Come back and mitigate it to push price higher to clear old highs. So as you guys can see, this zone didn't work, but this zone right here worked perfectly. Price build this inducement low right above it to push price higher. And now let's scale down even lower to the 5, the 3, and the 1 minute, how we would enter in this sniper trade. As you guys can see, I always advise you guys to trade inside of your session, right? So the session that I trade from is the New York session from 8 a.m. Price now on the 3 minutes, right, came inside of our 15-minute point of interest. This is our 15-minute point of interest, 15-minute OB. Perfect. And just put that on the bottom. So what we are looking for is for price to tap inside of our 15-minute point of interest, our higher time frame point of interest on the lower time frames now, right? And then we're looking for the same pattern to appear on the lower time frame, and then we'll scale in. So now but it has to happen during the session. Always have to happen during the session time, right? You never want to take these moves out of session time. It always has to happen during the session time when volatility is high. So as you guys can see, price came inside of our 15-minute zone, did a liquidity sweep, tap inside of it, and then what we're looking for is a internal range structural break, just like we see here. Boom, a break of structure. Perfect. And then this entry right here is the first entry, return to order block. And just like I said, right, if you miss this one, perfectly, if you miss this one, let me click this square. If you miss this one, it's perfectly fine, right? It's perfectly fine. You don't have to be in a rush. You don't have to be in a rush. After now, price give us a second break of structure. Boom, price is gonna give us a confirmation entry, a super confirmation entry, I call it, right? That's why there's usually no fear of FOMO, right? If you miss this entry and price is still inside of your higher time frame zone and price is still showing bullish sentiment, this could be your second entry now. Perfect. Just like I stated in the schematic. And from your second entry, you just place your stop loss at the old low, guaranteed trades. Perfect, right? We go from higher time frames to lower time frames. We're playing inside of a higher time frame zone, and then we're scaling down on the lower time frames. So we have heavy confluence and we have heavy confidence in ourselves strategy. So this is gonna be it for this video. Make sure you guys go on your charts and backtest this and see this for yourself. Weekend, this is it. Spektrades out.